Good morning and welcome to the market forecast. I'm John Hoagland. Thanks for trusting me with your time. It's already Thursday, February the 4th. We are at the beginning of our last 6 weeks of winter. Hopefully, things are going okay for you as far as trading is concerned. If you're in the markets already, hopefully they're going your way. As always, we're going to look at these markets in context through the lens of risk management. I'm excited about the trading day today. I think there's some pretty decent opportunities. We're seeing some markets really kind of wrestling with some important inflection levels, and there's going to be some good opportunities today. There always is opportunity. It's up to us to find it and to manage our risk to take advantage of it. As always, starting with the economic numbers this morning, we had jobless claims come out, and they came out much better than expected. I mean, we're looking at a 60,000 less in initial jobless claims and considerably lower continuing jobless claims. I'm hoping that that's good news. And as the title of today's forecast says, we've got unemployment numbers due out tomorrow. That's going to be the real writing on the wall as far as employment from last month, as well as we do have oodles of earnings out today. That is an industry term, but I like the good news that we've seen in the jobless claims numbers already. 9 o'clock today, we're looking at factory orders, and 9:30 the nat gas release due out. Those are, of course, in Central Time. We'd also have two talking Feds later around 1 o'clock, 1:30 Central Time. Probably not going to be too impactful in the things that they're saying, but we never know. As far as other news is concerned, the earnings and jobless claims on the top of traders' minds today. Of course, unemployment tomorrow as well as the U.S. equities are holding small gains early this morning. We've got our biggest list of earnings, I think, so far this week. This morning already out. We've got Merck, Philip Morris, Bristol Myers. After the close, we have T-Mobile, Gilead, Pinterest, Ford, and Peloton. Now, not huge numbers, not huge companies, but in collective groups, they may impact the marketplace, of course. There's murmurs of a regulatory fest, including Janet Yellen, the SEC, the FTC, or the CFTC, I should say, and the Federal Reserve, perhaps meeting next week to discuss the retail traders' short squeeze that we've all been getting a lot of news about. Maybe some of you have even been able to take advantage of it. So they're going to get together and they're going to in their genius way, try and figure out what to do about it, if anything, because these are free and open markets. We should be able to get in and out as we please. So that's going to be an interesting one for us to think about and to watch next week. As far as crude prices are concerned, they have kind of consolidated after a 1 million barrel draw by the EIA yesterday. Crude oil really just holding at the tops here. Huge increase in open interest over the last couple of weeks. We're going to discuss that shortly. Make sure you like, share, comment, question, feedback, and heckling are always welcome. Subscribe to our YouTube channel, and you can get notifications when we do go live. As always, hit that like button. We really appreciate that. And as far as the VIX is concerned, it's down a little bit this morning from its settlement yesterday, down at 22.66. The dollar index up a little bit. Nothing huge, 91.38. But it's good to see that dollar coming off its lows. These markets are challenging. Trading is challenging. Those difficulties, I try and think of it like this. Those difficulties are not there to point out our weaknesses. These difficulties are here to help us find our strengths. We've seen some pretty good success in the room here. I think we're going to start to see a lot more success for our traders here, and that is the goal. We want to see everybody doing well. We just want to say good morning to everybody as usual. Looks like Murph's first one in the room. You win the prize, Murph. Taurus Trader, good morning. Althea, Felix, I watched your interview yesterday. You did a very nice job. We really appreciate all the things that you had to say, and hopefully a lot of that is going to be really helpful for traders. Love the fact that you said, you've really got to kind of carve out your own path here. If you're listening to somebody else, you're listening to somebody else. Danielle, good morning. Guten Tag. Brian, Tanya, good morning. Rob T, Shane, Vlad, Bill, Shane. Looks like Felix gave up his spot. Well, you got to get up pretty early to beat Felix. I did open up the room pretty early this morning. So, Will, good morning. Ralph, Rocker, good morning. James, Andre, Angelina, Mr. Channel. I love that name. Danny Ireland, Alex, Mielis, Sean, Main Point, Vast West, John. I've seen some new names here. It's really good to see you here. Of course, our goal is to just kind of look at the markets in a consistent context, and if it helps you in your trading day, all the better. But welcome. We're glad you're here, Taurus Trader. Come on, let's get 40 likes today, Taurus Trader. I'm gonna ask you: is your name Jason? Let me know in the chat here. Sharon, good morning. Mike, bailed on your short and gold too early today. Well, that's okay. That tends to happen from time to time. Journal it. Think about it. Take it into your heart, and use it the next time you see that situation. Just writing a couple of notes here. All right, John Manning, good morning. Going to get back to this 150K back. Trade 5 micros, swing style trading, new tactic. Good, John. Good, excellent. Like I said, these difficulties are not to point out our weaknesses. They're to help us find our strengths, and you have been working very diligently at doing just that. When's the correction is a really good question, man. And it's that mindset that for the past 40 years, every time I start to think there's a correction coming and I start looking to get short, I end up being among the pool of short time frame traders that just gets run over and so it's very difficult to time those situations when those shorts are coming in. All right, thank you, John, Magnum, Taurus, Althea, hive minding. We got a beekeeper here. All right, Taurus. That is you. Okay. All right. So I want to put this back in the room here. This is the registration for market therapy next Wednesday, 3:15 Central. I had the wrong time on it. It was pointed out to me yesterday. So I had to adjust the time, and it may have knocked some of the registrants out of the room. So if you are interested in coming to that, just go register again, just to make sure that you have your spot and that you have that opportunity to join us for that. Okay? We all get squeezed out when it drops. Exactly. So the minute you think it seems like Dad used to say, the market always looks best at the top and worst at the bottom. When all the retail traders, when everybody seems to be already long, that's when it tends to happen. So when we all are thinking the same way, that's when we have to stand alone and look the other direction. And it's going to be very difficult to time it and to catch the that opportunity right when it starts. I find myself trying to catch up to it, if you will, and trying to find ways to get into it. And it's always been a challenge for me to get into trends that are already underway. If I'm in it when it starts, I'm good with that. It's always difficult to find my way in. But remember, in my experience, when there's a correction, when volatility comes in, fast means slow to me. I actually slow down and I'm more choosy with my trade locations. Yes, the market always goes to the point of greatest aggravation, maximum pain to as many people as possible, then the highs end. Absolutely 100% right. And it's just diabolical. But again, it's not meant to point out our weaknesses. It is here to point out and help us find our strengths. Speaking of strengths, let's take a look at the daily and crude, shall we? All right, so obviously, since November, we've been in a pretty good upside move here. We've got areas of balance that are separated, not necessarily on top of each other. We've got a new leg to this move to the upside, and I was going to talk about the open interest. Now, we added another 54,000 contracts in open interest. Now, that's an estimate, but it's going to be pretty close to that. Since Inauguration Day, we have added 219,000 contracts to the crude oil. Now, that was just the end of rollover. We had a rollover range here. Okay, I'm looking at this as kind of our rollover range. The 20th, Inauguration Day, money started coming into this market as of that day. We have almost added 10% of our open interest since then. There is a lot of speculation and energy in this market. We were talking about the fact that when we do break out of this, it could bring a substantial upside move or downside move. We don't know what direction it's going. It looks like it's going to be going higher, and the volume is maintaining, and another 54,000 in open interest yesterday. This is presenting itself as a very strong upside auction. Doesn't mean it can't change. A news event, something happening could create a change in this direction. But when you look at the auction process, you look at, okay, we've got a little momentum. We're spending time above this weekly kickoff level. We're adding volume. We're adding open interest. This is presenting as a strong upside auction. If it starts to fall off, when we start losing open interest or losing volume in this move to the upside, then we'll start looking at possible opportunities to try and sell strength in this market. But for now, with the information we have, we are looking to buy weakness in this market. It doesn't mean that this market cannot come all the way back and retest weekly kickoff high or the top end of this area of balance before continuing to the upside. So we have to be looking at what we see, and we're going to start on the 30-minute chart here. So this is yesterday's range and move, okay? The market has been kind of struggling during regular trading hour sessions to maintain higher prices. However, we have value moving higher over time. We've got a gap. We've got another gap. When this market turns around, these gaps are going to present as weakness or weakness areas. We've got naked points of control. This move is very strong to the upside. However, it might be a little bit emotional and a bit disorganized. So what does it tell us for today? Well, if we're looking to buy weakness, we're getting a pretty decent opportunity to try and stay patient this morning and look for an opportunity to buy the market at weakness. I'm looking for high target areas, right? Target rich environments. Well, you see one here. You see settlement down here at 55.69. You see point of control just below that. You see value low just before that. We've opened inside of range and value, which says I may actually get the opportunity to look at this level as a potential area where I can have an execution and at the same time limit my risk. Okay? So we're in range, we're in value. The market seems, kind of pleased with where it is right now. But I don't know how long that's going to last. And if I'm thinking that this market, the auction process is good to the upside, I'm going to look for weaknesses to buy this market. Again, there's no guarantees where that weakness is going to take this market and where the best trade location is going to be. So it's our job to find levels or areas where we can limit our risk. If the value low doesn't hold down here, maybe there's another opportunity for us, perhaps point of control from the day before yesterday. We don't know. All we can do is put our hypothesis in play. And if the hypothesis doesn't hold, if it doesn't come true, then we look for the next opportunity. We look for the next hypothesis. So again, stay patient here in crude oil. If we are of the frame of mind, we want to look to buy weaknesses. We've got plenty of weakness levels and visuals to look for those opportunities and limit our risk. S&Ps, when is the break coming? When is the break coming? Who knows? Here we go. Let's take a look at the daily first. So we had a pretty good pullback off that all-time high here. That all-time high remains in the regular trading hour session, which is a good thing. If it would happen in the overnight, I'd say we're probably going to go and take that out in the regular trading hour. We already did that. We were looking at this area up here as an area where the longer time frame auction was kind of tiring up here. We started looking for opportunities to sell strength, and it worked pretty well for us on certain days. I really wanted to stay patient in looking for those opportunities to sell strength because we had a couple of really strong up moves, really strong up days, and then of course Tuesday, Wednesday, Thursday, it's taken us right back up to weekly kickoff high, where we are currently trying to digest and trying to make some decisions. We had a very indecisive daily bar yesterday. We have a very indecisive daily bar so far today. It's an inside day in extended trading hours. We had volume drop, okay? That happens on up days. Is this of concern? Maybe. Is the fact that we lost 11,000 in open interest up here of interest to me? Yes, it is. It's telling me that this short time frame auction to the upside on lower volume and losing open interest may be losing some of its steam. So is this an area where we're going to be looking to sell strength? I'm only going to be doing so when I can limit the risk. I don't want to risk a lot because I've been, like every retail trader, run over trying to pick the top in the S&Ps. These markets are extremely resilient, and whenever I forget about that, I usually am reminded with a stern lesson. So, the indecisive direction, yeah, we've got some upside direction in short time frame, even in long time frame, but the performance to me is not all that great. What are we going to do about that today? Well, here's our weekly kickoff high here, 38.25, which became more magnetic than repulsive to the marketplace. Not like repugnant, repulsive. More like a magnet keeping it towards it than opposing magnets keeping it away from it. So we've got some time here. Here's our value area from yesterday. Here's settlement, 38.23.50. Put that on your charts. We've got that weekly kickoff high here. We keep attempting to continue to bring price higher and higher. We've failed to be able to bring value higher above this level. Even with our return to this level, we have yet been able to have a day close back above this weekly kickoff level. So there's good things and bad things here. We're always dealing with cognitive dissonance in the fact that we have information telling us that the market is probably maybe struggling to hold the price and get a closing on a daily close above this weekly kickoff high. There's also the idea that the market has been spending a lot of time up there. We've got value kind of spanning it. So this is kind of a magnetic thing. Is it going to be pivotal today? I caution using it as a pivot. You can really chop yourself up if you're going short below, long above, short below, long above, short below, long above. Try and stay patient in that regard. We're going to open in range and value. We're waiting for more information in unemployment tomorrow. Stay patient today. No real overnight inventory. If there is, it might be a little bit to the long side right now. I'm going to just try and stay patient. I'm not going to go looking for trades today in the S&Ps or in any of these products. I'm going to let the market say, hey, look here. This looks pretty interesting. And if I like it and I can manage the risk and it's in line with my hypothesis, then I'm going to take it. If I go looking, I'm going to find them, but they may not be the trades I'm looking for. NASDAQ? Right, volume maintained yesterday. Open interest falls by about 3,400, and that's, again, a little bit of concern. We've got our overnight high here. We were unable to attain the the all-time high over here. We tried. We didn't get there. We tried again last night. We didn't get there. The loss in open interest is of a bit of concern. The volume is a little bit higher, so again, I'm dealing with some cognitive dissonance. The NASDAQ never really broke downside structure, where the S&Ps tried but failed. The NASDAQ never even tried to break upside structure, so it is presenting as stronger. With all the tech earnings coming out and all of that, it's going to be a challenge for us to find good trade locations. The NASDAQ, to me, is such a wily beast. It's so volatile even when it's not that volatile. It just moves so quickly, it freaks me out. So, open interest is kind of falling as price tries to creep up on that all-time high. Upside structure remains. We had a kind of a weak close yesterday. Let's take a look at that in the 30-minute chart. Okay, here's our overnight move to try and catch the all-time high, which we were unable to do so. We opened yesterday. We had a pretty good break, tried to recover it, but by the end of the session, we ended up just kind of closing this market right on its lows. We don't really have any overnight inventory with which to talk about. Got long, got short, maybe a little bit long, but we've been hanging here for a while, and that may be enough to kind of even out some of that inventory. Consolidation evens inventory over time. So I don't know if we've had enough time here. Basically, we're back in range. We're back in value. Try and stay patient. Better trade locations are likely to come as the day goes on, unless the opening range is left at either the high of the day or the low of the day, regular trading hour session day. That may be an indication of an earlier opportunity. Keep your eyes peeled for that. Gold. All right, well, we finally got our break out of the balance that we've been in, and we've broken out below the weekly kickoff low, which happened in the overnight, which bums me out because now I'm trying to find ways to get into this move to the downside. Yes, 6J still is a TST product, Kevin Scott. I just saw that pop up there. So one of the targets was going to be this swing low here. We've moved below that target. I'm not concerned with this trend line. It's just on there as I don't know, some sort of thing. 1809 was a previous weekly kickoff level. We are currently below. The next target for the downside, where I think we may find some buyers down here, is this swing low. It is 1771.30. If you are in this move to the downside, don't try and fight it. Think about, would you buy it here? If you wouldn't, then stay with your short. I wouldn't buy it here. I don't want to step in front of any freight trains. And the last time I said that, it ended up being the dead high. So we don't know what's going to happen. Here's that 1809 level. Look for that 1771 swing low as a possible visual target for this, because there is still some space down below here for this market to continue to the downside. It's going to be hard to try and get in to that move. All right. Silver. We don't want to forget what we just left up here a few days ago. We left an island top. That's going to be an ominous thing for longs. It's a reversal pattern that can bring bigger moves. I don't want to scare anybody. I think we're still kind of holding upside structure. I've got 1, 2, 3, maybe three decent points of contact on this line here. And this line, I'm going to probably be viewing as a degree of support if the market even gets the opportunity to go there. There's that swing high that we tested from back here almost to the tick. I mean, how do you not try and take that trade? It's so cheap. I'm not a silver trader, but when we get to these swing highs, these are important levels. The 30-minute chart, just to point out our island top here, we're continuing to see value moving lower. We're seeing price continuing to move lower. Don't try and pick a bottom in this here just yet. I think with that island top, we're looking at a market we want to try and sell strength for a little while. The euro, we broke out 2 to 3 days ago, 4 days ago. We are continuing to see this market moving to the downside. We started to see a little bit of drop in volume and even a drop in open interest. We lost 5,300 yesterday, which to me was more of a short covering, taking buying power away from the market than it was a long liquidation type of situation, just by the way the day closed. The day closed near the high of the session, and that's telling me that we got some shorts that probably got a little bit nervous. I still believe there's more space to move down here, but that volume and open interest, not all that impressive for the auction process. Here's why I'm thinking that our loss in open interest yesterday was more short covering. I think some shorts got a little bit nervous down here and moved this market back almost like, I guess it was kind of higher on the day. I lost my my settlement price over here, but it ended up higher on the day. So that says that buyers were the ones probably decreasing that open interest, which means we lost some shorts, which does take buying power away from the marketplace. This previous weekly kickoff level has been providing some pretty decent resistance. Okay, some of these levels remain, and that's why I kind of leave them grayed out. This I think it was 2001, 2006 was the actual level, if I'm remembering correctly. It's providing some pretty decent resistance. This gives the opportunity for us, if we can get into this and limit our risk for a continuation to the downside, it gives us at least the opportunity to limit that risk. Now, Kevin, we had some requests to start looking at the treasuries. So we've taken out the Japanese yen and added the treasuries, the 10-year, to the market forecast this morning. I keep going way too long here. I'm going to have to consider starting the market forecast early. It was suggested that 7:45 Central might be a good time for it. I don't want to get people up too early, and I certainly don't want to take up too much of people's time. We're going to get through the 10-year here, and we're going to get down to business because our equities are opening as we speak. So we're getting a nice test of weekly kickoff low here. We had some pretty decent increase in volume towards that level, and we added 29,000 in open interest. So there was some money that came into the short side on higher volume. That's going to be encouraging for me to possibly see this downside auction continue below this weekly kickoff low. Your dollars rised. Yields have risen a little bit. Let's look at the 30. Okay. Here we are. It's amazing sometimes how these weekly kickoff levels, even in short time frame, provide decent opportunities. Now, this is a very thick market. There's not huge ranges. I just find it funny how the market kind of came down here, held it as resistance, came back above it, held it as support, now is finding it as resistance again. This does give you the opportunity to limit your risk if that is part of your game, and I hope it is. And that's going to do it for the charts this morning. Want to take our deep breath, stay humble, grateful, and creative in your trading today. The markets and the difficulties are not here to point out your weaknesses. They are here to help you find your strengths. Go find some strengths today. Go make some profits today. Trade well. Dan will see you this afternoon for the market recap. I'll be back with you tomorrow morning for the market forecast. Thank you, everybody, for attending. Thanks for the likes. Thanks for spending a little time with Old Hogue here. And have a great trading.